Morning. Nothing? No? Good morning, everybody. Can you give me a sound check? Can you hear me? Can you hear me? All right. So I wanted to start just a minute or two early. I've seen some talk about indicators. You could spend all year learning indicators and it wouldn't improve your trading the slightest bit. If you're losing more than you win, looking for an indicator to help you is not going to help you. Take the opportunity to focus on price action, not indicators. There are a couple basics that you could look at, right? VWAP, maybe one moving average. That's about it. Um, Depending on the kind of trade that you're about to do, maybe you could do, if you're scalping, you might need some kind of order flow. But most people not only are using the wrong indicator, they're using it the wrong way. And they think, well, if I can just find the right setting for the right time frame on the right chart that I'm looking at, then I'm going to get this magical instrument that's going to help me increase my win rate. And that is absolutely not true. There is no magical indicator that is going to help you improve your win rate. Only price action. The last thing you should look at is an indicator to confirm what you already analyzed in price. And make sure that you don't double up on your indicators. So if you have something looking at volume, you don't need something else looking at volume. If you have something looking at momentum, you don't need something else looking at momentum. The gappers list was not too big today, not too bad. A couple of markets I'm looking at: AIMT, UNFI, DVN, TSG, VHC, SFIX. JNUG also gapped this morning, and AYA. All of those were posted in the room already, so you can just scroll up if I read those too quick. Be very careful with the commission free. I posted the article. You can scroll up. Free isn't always free. All right. So when they are selling your order flow, they are no longer looking for the best bid ask. And that's what algorithms were designed to do, is help you get the best bid ask. If now instead it is driving your order flow to a place to where it can get payment for your order flow, then it's no longer looking to get you the best bid ask out there. Okay, that doesn't mean that you shouldn't use it. I would happily take free, and I trade on Robinhood all the time. It'd be nice to see that the other brokers can do that, offer us the same opportunity. Just realize that free isn't always free. I have no idea how it's going to be looking at the open Vulcan. I can't see into the future any more than you can. We want to see SPY's volatility continue to rise, right? And in this uncertain market with the futures down on the morning, we should see volatility continue to rise. I posted an Apple trade yesterday on Twitter. It's a credit spread with anchors set at $25. Apple did fade below that $25. Uh, I'm not interested in closing the trade yet. We'll just see how it goes around. When we opened the RTS, SPY's volatility was at 13.5. It's at 18.5 now. It's 5 points of volatility since the time we put it on. So I wouldn't be interested in closing it out early. 10 points of volatility is usually the first target, and this hasn't even begun to get rowdy yet. So as far as I'm concerned, hanging on to it would be appropriate. Although, I mean, if you're in the green and you want to free up capital, perhaps put on a different trade, there's nothing wrong with closing it early. I mean, it is in the green. So, it's something to think about. So there's a lot of different ways that people trade. Some people don't trade the open. Other people do trade the open. I see a lot. I see a lot of places, day trade room, swing trade room, about people telling other people, don't trade this, don't trade that. Oh my gosh, it got volatile. Jump out of the market. Get out. Sit on your hands. Don't trade the open. Don't do this. Don't do that. That's absolutely not true. Have a strategy. If you don't have a strategy, don't trade. But if you have a strategy to trade the open, trade the open. If you have a strategy in a waterfall, trade the waterfall. Trade a parabolic move. There's no such thing as don't trade. That's what we're here to do, is trade. And we're here to learn how to trade. Right? So if you don't have a trade strategy for a particular situation, then obviously don't trade that particular situation. Find out what you're missing to be able to develop a trade strategy and then trade that situation. There's nothing wrong with trading the open. There's nothing wrong with trading the first candle of a 1 minute chart if you have a strategy to do it. Their strategies are not that complex. They don't have to be, you know, 15 different things that we look at to pull the trigger. It can be two or three. That's it. We're in or we're not. Mm. I don't know if you guys had the opportunity, but X Steel made some moves the other day, and that was a that was a fun day. I had a lot of fun on X Steel. It's almost always on my high implied volatility list. It's a fun market. It never seems to disappoint. Yep, X Steel. That was a heck of a run. There was earnings on PayX today, so it's on my list. WTRH had a nice little pop into the close yesterday, so I'm watching that this morning. See if we can get some follow through or a fade. I really don't care which direction. I'll take it either way. IMRN is also on my list. InBev, just from the amount of news that InBev keeps getting, I'm watching that. Might get some opportunity there. Overstock, it's been in a consistent, persistent trend through yesterday. Looking for some continuation. If you look at X, it ended the day closing the gap, or I should say just coming back down, and depends on how you want to look at it. Inside day, no, wasn't even an inside day. So that's what I've got for the open. 12 markets aren't too hard to keep track of. Uh, been quite a bit of news in the last few days over these commissions. Like I said, I did post an article reading. You can take the opportunity to read about how they're actually making money on your trading and why they are even willing to offer such a thing. So we've got BBBY, LEN, and PayX for earnings, and LEN could be an opportunity worth taking a look at. Now we'll save that for the day trade room. That's a bit pricey. Bed Bath and Beyond, we could get some opportunity here. Price target on TSG. There is no price target on that thing. There's no price target. We got to see if this is going to want to try to close the gap, or if it's going to consolidate, build a base at the open, and run from there. That's the only thing we can do. Give it a good 5 or 10 minute price discovery at the open and pick a direction. If you look back, look left, it does have some resistance. Yeah, it's a big ask. It's a big ask, but you know, there's nothing wrong with just saying that we don't know. A lot of times, well, not even a lot of times, what do? We look at what has happened previously and we anticipate the same setups, all right? So right now we don't have a setup and it's sitting out in the middle of nowhere with some Globex move. We have nothing to work with at this point. And it's okay to just say I don't have enough information to trade this. We don't have anything yet. It definitely has a lot of focus, a lot of attention. I did do a video on what we watch and why. When I get done cleaning that up, I'm going to get that loaded. That should help you day traders who might be newer. The idea is not to just sit and stare at one single chart that you're looking to trade, but take a look at the overall market as a whole. The S&P drives order flow, so recognizing that when the S&P moves by a waterfall of 2%, most of the marketplace is also going to take the same direction move. When you're trading a lower volume or a lower market cap, you could get some leeway. And the idea that most of what we watch in this room tends to move on its own outside of whatever the market is doing can kind of gives pushback to that theory, but still keeping track of the overall market by watching a few of the futures charts can give you some heads up or an early warning to help you get out of a trade or perhaps prepare to get into a trade based on what the overall market is doing. I've said it before, there's a list of Twitter accounts in the alerts section if you scroll up. Black Box Stocks, Benzinga, Seeking Alpha, Swing Trade Bots, Bloomberg, the Bullish Bears. There are a lot of Twitter accounts worth watching to give you trade ideas and trade alerts. And of course, since they're on Twitter, they're free. I did do some work on my Discord. It's mine. It has nothing to do with the Bullish Bears. Don't ask the Bullish Bears to get Discord because we're not going to get it. But I have discussed my own Discord. It's free. You will not get trade ideas or trade alerts because I don't post any of that stuff in there. It's just an educational Discord. I modified it yesterday to follow those Twitter accounts. So if you go in there and you look, you will see breaking news and headlines from Bloomberg and from everybody that I just named in that Discord. So the bell rang. We are a go. Looking for a little bit of price discovery. I'd like to see at least a 5 or 10 minute candle to get some direction. Let's see. I'm going to swing over to UNFI, see if this is easy to borrow. Because if it's not, we can just take it off of our list. No, it's good to go. So UNFI, right now, you can still short this. I don't know that we want to yet. In news, Blackstone agrees to buy 65% of a water park resort. Heh. Yeah, okay. Let's see what else we got here. TSG giving a fade down to the moving average on the 2 minute. I'm going to bump that up to a 5 minute. SFIX getting a little bit of volume at the open. Now, I didn't check the numbers that came out on FFIX. But looking at the fade, The numbers might not, the forward outlook might not have been that good, or the numbers might not have been that good. Take a jump over to the sectors. So this is an easy, quick way to get some perspective on the marketplace. The Russell dumped at the open pretty hard. One of the things that makes it worth watching the Russell is that's where a lot of your banks are at. Your banks, your credits, your lending, consumer consumer lending, smaller market caps go in the Russell. So a lot of what we do in the day trade room focuses on the smaller market caps. Keeping your eye on the Russell can give you a bit of a heads up. The bonds are green. Looking at the sectors, consumer discretionary, both of them, the retail side and more of the resorts, they both gapped down. Utilities, energy, healthcare, every single sector is down. Normally, in a market like this, people would start moving to the more defensive sectors like consumer discretionary and healthcare, retail, utilities. We're not quite seeing that yet. Some negative news on Boeing. More of just looks like an opinion piece than anything else, but it is from Seeking Alpha. Some news on SFIX. Looks more like a perspective on how their earnings turned out from the Wall Street Journal. It does look like we are going to be in a distribution day, at least at the open. Could get a little bit of change throughout the day. The one sector showing a little bit of green is real estate. SNNA was called out in the room. Looks like it's going parabolic. So this kind of fits in with what we were talking about right before the bell. I hear all the time, oh, don't chase this, don't get into this, let it pull back, let it do something. There's times where a market won't pull back, right? It won't offer you an opportunity to get in which case you just have to decide, do you have a strategy that can get into this market even without a pullback? Now, this isn't a very expensive market, and you could scale into your position, right? You could jump in with, say, 500 shares, and if it breaks through the previous level, the previous day's levels, you could add to your position, right? Start out with a pretty wide stop since you're starting out with a lower share size. And then as you increase your share size, you could decrease the distance to your stop. Thereby, you're not increasing your risk, right? You're only increasing your profit potential. Mel, when it comes to stops, they're a lot like opinions. Everybody has one and nobody wants to hear anybody else's, right? So, like, I'm not a big fan of stops. I don't like them, but my strategies don't use them. and that's probably why I'm really biased against them. That and I trade options more than I do shares, so I'm kind of biased on how I use stops and how I perceive stops. But don't let my bias stop you from using them, right? If they're a part of your trading strategy. Um, Trailing stops, there's nothing wrong with a trailing stop, but don't let a market that's ripping in one direction or another hold you back from getting in if you have a strategy to trade it. And that's the whole idea. If you don't have one, great. That means we have something to focus on, right? Yeah, absolutely. Like with SNNA, suppose we do get in with a trailing stop. Um, how tight would you want that? Would have to come down to how big of a position you're going to start with. Since this is in a pullback and it looks like it's going to ride the VWAP for a moment, this could be an opportunity to get in before it makes a move, meaning we're anticipating the trade instead of waiting for confirmation. If you're going to anticipate, maybe you don't want to get in with 5,000 shares. Maybe you want to start out a little smaller, have a wider stop, and then scale into your position and shorten your stop as you do. That way, you're not increasing how much risk you're taking in the trade, even as you do scale up. TSG call out in the room seems to be getting very volatile. Let's take a peek at that. So when I look at this, it came down and it hit something. That used to bother me. I wanted to know, what did it hit, right? And so if you jump out to a higher time frame, what did this pullback hit that made it stop at that level? Well, if you look left, it would be this price structure here, right around that 1870, 1880, $19 range. It's a whole dollar range. And the 200, apparently. Yep. So, these might seem like arbitrary places where price just suddenly turned around, but that's not how it works. Price doesn't just suddenly turn around, it hits something. And when you can identify what it could hit before it hits it, then you start getting the opportunity to anticipate trade entries. And he called that on the weekly. So even though this is a lower or a cheaper market, taking the opportunity to go out to the weekly chart did a lot of good, right? Gave him an opportunity to anticipate where price could potentially get hung up or reverse or stall. Good call out, by the way. Do a little adjustment here. Another thing you can do is when you're building your watch list in the morning is take the opportunity to draw out some lines. It doesn't necessarily have to be fib lines, although I've found them to be really useful. X still is dumping. Um, Price target on that would be 1050 for me. IMRN looks like it might be trying to build some support around the 315. That's the 200 moving average on the 2-minute. Overstock is consolidating right around that 1940 range, 1920, 1940. InBev dumped hard at the bell and still looks to be falling. I don't know that we can take that one. It might be hard to borrow. Nope, it is not hard to borrow. InBev still pushing lower and does not Does not seem to be interested in building any support yet. So that's two, not necessarily waterfalls. They don't quite meet that level, but they're definitely strong trends and good trade setups. Looking at X, I called 1050 would be where I would run my price target on this. If you look back at yesterday's Globex, the pre-market, right around that 1060 range, that would be a good place for perhaps the first target. Look back a bit more, you can see that the 1050 range, it does have a lot of history. It's why that was the first thing that came to my mind. And for InBev, I have nothing over there until last year. Now, actually, we're even below that. So we'd have to go back a little farther. August of last year. September. You can see the consistent, persistent downtrend on InBev. A nice pullback to the 50 on the daily. Took the rejection with just a nice clean move down afterward. That's in the last week. And X Steel also took a rejection at the 50 yesterday. Gapped hard in the overnight and is consistently moving lower. On X Steel, watch that $11 mark, round number, and it also has some close history right there. The low of day from Tuesday and from last Thursday. You could get hung up. It might find some support in those areas. IMRN really is building a base of support around that $310 range. 310, 311. What else do we got? Some news. SoftBank news. Seems to be a pretty quiet day. Nothing from Stock Twists, nothing from Live Squawk. Live Squawk is one that I focus on a lot. There was some negative perspective on Boeing today, so this could continue lower. You might, for those people trading options, might look to develop a trade opportunity here. Notice it's also continuing its move from this price range that it's been in. So I was looking for some follow through on WTRH from yesterday's close. We definitely didn't get any of that this morning. It's back down to the bottom of its open range this morning. Could be looking for a breakout below. PayX is in between the middle of its open range from the high of the open and the low of the open. Looks to be crossing through VWAP. X Steel might have found some support around that 1120 range. Devon Energy. Remember, the energy sector was down at the open. We haven't gone over to take a look at where it's at now. SFIX broke the 50 on the 5-minute. Let's jump over to FFIX. We might have a trade here. So it found support at the previous day's low. That's where SFIX bottomed out. And it is making a run. Price target on that would be yesterday's. It's not the low of yesterday due to those wicks after hours. But there's a price shelf right around that 19.5 range. If you look back in the last few days, it's this consolidated area from Tuesday and from Monday. That was the session high on Monday and midday yesterday. So you're looking at about a $1 move in SFIX if it can maintain this move. It is down almost 9%. So be aware of that. And this move up can absolutely be nothing more than a pullback before moving lower. Doesn't mean you can't take a bite out of it. TSG finding its overhead resistance. Let's see what I need to take off of here. Regular trading hours. TSG or SFIX is coming into its open range high after a slight pullback. See if it finds some support on that 50. I am on the 5-minute 50. I'm going to have to do something with those open range breakout indicators. They're just too much clutter. If you take a look at Snap, EMW, the pivots, it's coming into S2, found a little bit of support. It's trying to pull back up. The trend has been continuous since yesterday. Consistent, persistent trend to the downside. This pullback, which is all it appears to be at the moment, is a pullback. Could be nothing more than some consolidation before moving lower. No indication that it's anything other than that at the moment. So if you are newer and you're looking for some indicators that could help you out, there's an indicator on Thinkorswim that you can find if you just type in daily, D-A-I-L-Y. You can see that it shows you the daily high, low, daily open. If you click on those and add them to your charts, you can see yesterday's high, yesterday's low, and those areas can absolutely allow you to anticipate price action. That's an indicator absolutely worth adding to your to your charts, and it's very useful to your trade strategies. We no longer need pre-market volume. Kick that one off as well. There we go. And then adding pivots can offer you a little bit of perspective of where price is at now compared to the previous day's action. Pivots calculate based on yesterday's high, low, and close divided by 3. That gives you the purple line here that you see. That's your pivot. And then the R1 and S1 is calculated once you know where your pivot is. Later, Shockwave. It is a bit of a slow day. I noticed that the social medias are not exploding with information. BlackRock, again, has some dividend news. Let's see what else we got. Swing Trade Bot is even quiet today. Normally, Swing Trade Bot would be blowing up. There was a Google post. It's breaking down from a rising wedge. And the price target for that would be the August lows on Google, GOOG. AIMT has consolidated around that $20 range. TSG is pushing against the 50 on the 5-minute. I'd be looking for a break, a confirming break above that, or a failure. VHC pulled back off of its lows, but it does not look like it's going to take a run to the top side. So we could be getting a trade set up on VHC. This could definitely offer us a trade opportunity today. So Clara, if you scroll up, I posted an article that was written by somebody at Benzinga, and they discussed the idea that you get what you pay for, and free is not necessarily free. You're giving up a better bid-ask spread price because they are going to sell order flow. Okay, so normally the algorithm would try to find you the best bid-ask price, and instead the algorithms are just going to push your order flow so that they can sell it. And you just scroll up and you can find the article. The speed of execution for your order shouldn't change. They're not going to slow down the algorithm. It's the idea that slippage is going to cost you, and they did a really good job of explaining it in the article. Devon Energy had a nice little pullback from its low. This is another one that could offer an opportunity for entry. So we've got some markets setting up. SFIX was pulling back a bit more than I would like. Makes sense, people are taking profits. Let's see what else we got. No, well, he couldn't hear me. So Oliver says he's not getting audio. Oliver 54. Creed, if you could perhaps give a holler out to him and explain how to reset his audio bridge. He seems a bit lost. I would walk him through it, but he can't hear me and I can't type it. a head and shoulders on a 1 minute should not be trusted. So let's go take a look at the overstock on the 1 minute on a bigger chart. Turn off the Pearson pivots. They're just too much clutter. All right. So, Clara, you might be a bit newer to the room. I am absolutely the worst person to find head and shoulder patterns. I used to think that perhaps I was broken and I just couldn't see them, but there are a lot of people who can't see that pattern. It's an abstract pattern. Some people can't see pictures in the clouds. You know, like somebody else can say, "Oh, look, I see Goofy in the sky." I can't see pictures in the clouds, and I cannot see head and shoulders. I even printed it out and kept it next to my computer for a long time. I do have a indicator on NinjaTrader that points out head and shoulders, but I've never been very successful on a 1 minute chart of actually trading a head and shoulders pattern, even when NinjaTrader identified it for me. So here's a 1 minute, 3-day. I don't see a head and shoulders pattern. Not to say that it isn't there, but I don't see it. I think I'm blind to them. MTP was called out in the room. This is a pharma. Wow. Spiked up to 170, faded back to 150. Still green, still bullish, still pushing to the upside. Let's see what we get out of this. Needs to hold that 150. 150 is a psychological support, and it absolutely should hold that. It did pull the VWAP up in that spike, and it crossed through to the downside below it now. Change my moving average to a 9 for this. So MTP is riding the 9 right now. Looks like it's trying to fight that VWAP and now the overhead resistance of the 150. Nothing from black box stocks and nothing from cheddar flow. It's a pretty quiet morning. There was some halts earlier. We're past them now. CRNC might be worth taking a look at. CRNC. That was at 954. Swing Trade Bot has put out its Twitter alerts for the 200 daily moving average, the 200, the 20, and then they put out their Bollinger Band breakouts. You can find them in their Twitter feeds. Let's go take a quick peek at SPY and see what we got going on over there. We'll also take a look at the sectors and the indexes. SPY is consistent, persistent move to the downside. This has a nice, clean price direction. Doesn't look to be stopping anytime soon. Oh, what happened here? Pulled back to, I would say, not even the 9. We check the 12, 12 and 21. So when it comes to looking at the SPY, you wouldn't want to only look at the SPY. You would also want to look just like this. let's do it this way because this is how I trade futures. If you took this chart, this 4 grid here, we got the S&P, the Nasdaq, the Russell, and the Dow. Instead of looking at futures, you could look at the ETFs instead. So you could look at SPY and the Qs, and you could look at IWM and the Dow. Absolutely the same products, just the ETFs of those. Notice that they're all working in sync. One of these is a bird dog. One is leading the pack and the others are following. If you're going to trade SPY, you would do yourself a favor and watch the other 3 markets at the same time, especially if you're going to scalp SPY. Right? If you're just taking a trade for the day, this might not be as useful. But if you're getting in and out of the market in SPY, then keeping your eye on these other 3 is going to help you a lot. Personally, I'd rather watch the futures, but they have a higher order flow. They're more liquid. They're globally traded, but same difference, right? Looking at the ETFs or looking at the futures, either way. But the trend is clear. Consistent, persistent move to the downside. The pullback came right up into structure, and I'm looking for a continuation lower. But what we do need to be aware of, no matter what we're trading, is the tick, the AD, and the overall market cumulative tick. It's more of market breadth. Stock Charts TV covers market breadth a lot. So if you're sitting around in the evening and you want something to watch, you can take a look at that. This is the market breadth indicator that I use most often, looking at all 4 market cumulative tick. The distribution line for an advancing day versus a declining day is the 0 line. We are in a distribution day, and we were moving down hard, but it looks like we're starting to level out a little bit. The dots across the top show when there is sync. So when all 4 markets are moving down, you'll get a red dot. When all 4 markets are moving up in sync, you'll get a green dot. And when they're moving in different directions from each other, you'll get a white dot. If you use this indicator, pick one time frame and stick with it. I like the 5-minute. You could absolutely use the 1-minute or the 10-minute, whatever it is that you want to use. Just don't swap it. Don't watch the 5-minute today and the 1-minute tomorrow, and then the 10-minute the next day. Stay consistent with whichever one you choose to use. Looking at the sectors, I see no indication of a reversal in this market. All right, so if you're looking for a change in market sentiment, it's not there yet. I know we're seeing a strong lift in the Russell and the Dow, which is bringing around the S&P and the Nasdaq, but it's just not there. Look at every single sector here. At the most, they quit falling, but we have no pop to the upside. If no sector is moving up, then we have nothing to carry the market up. All right, we are getting a little bit of pop now in energy, but it's only coming back up to where it started the day. Utilities is pushing lower, and consumer discretionary is pushing lower. Consumer discretionary doesn't get a lot of love or a lot of attention, but it absolutely is a very large rock of weight on the marketplace. And so is XLI, which is what I usually can. I look at XLI like the junk drawer in the kitchen. For every market that they just really didn't have a spot for, they threw it into XLI. SPY still pushing back to the upside. Still not seeing a change in market sentiment, though. The tick is moving up with it. The AD is still negative, really negative. When you see an AD this negative down around the 450 range, we look for reversals in the market when the AD is this negative. Doesn't mean we're going to get it, but contrarian perspective says when you got a market this low in the AD, that's what we should look for. Now, if it pulls back into the negative 30s and stays there, or the negative 300s, that would just constitute a distribution day, and we would look to stay there. The pullback on SPY should not exceed that VWAP. If it does, we are looking at a change in market sentiment. There's just no sector indication yet that that's in effect. But that pullback has broke the 786. So X Steel has been stair-stepping lower. It just had a pullback to the VWAP, so a trade entry could be setting up there. Nice, clean, consistent price action. It's exactly the kind of markets I like to look at. See you, V-Lady. So the lower indicator that you see here on my charts, this is just a regular RSI, but I set it to 2 periods and added a couple of lines. It makes it a very, very responsive RSI. You can see that's why it's so whiplash all over the place. Tend to ignore anything in the middle, and I'm only focused on the extremes when it pushes below the 10 and when it rises above the 90, looking for reversals when that happens. It's like a contrarian indicator. But again, we don't pull the trigger based on what the indicator says. All we're looking for is confirmation on what we already have analyzed in the market. CRNC halted again. Let's go take a look at CRNC since it keeps getting halted. CRNC. Yeah, I'm typing that right. Must be a OTC that Thinkorswim isn't interested in covering. Starbucks dumped. WTO rules in favor of the U.S. in the Airbus dispute, paving the way for tariffs on $7.5 billion of EU goods. Ouch. That was at 10:05. DBLS halted. Nope, it doesn't like that one either. Got some unusual put sweep activity in T-Mobile. Or AT&T, not T-Mobile. There was 3,325 November puts bought. I agree, Red, there is not a lot to look at. There are some good setups coming in, but nothing that, range-bound market, not a lot of bites. Let's see, AMRN also had some call sweep activity. 1,700 calls from AMRN. Those came from Cheddar Flow. GE Power from Barron's So a little news on GE could get a nice pop on that. Let's go take a look at GE. I haven't been there in a day or two. Yeah. Yep. GE liked that news. So it hit the 200 on the 2 minute. Let's take a look at the 5 minute, get a better perspective on it. If you look in the pre-market, it's pulled back to the pre-market highs. So it's up off its lows. Got a call out in the room, KGC. So this faded from the pre-market highs. Looks to have found support around that 475 range. Could offer a nice trade opportunity. It does have a lot of resistance now overhead around that 480 if you look left into yesterday's price action. See you, Susie. That's right. I didn't post into this room, but every day you should look at the calendar and see what economic news is coming out. So on your Thinkorswim platform, you go to Market Watch, click on Calendar, and if you uncheck Show All and just choose Econo Day event, you'll see the events for today. You can see tomorrow we've got a lot of data coming out. So a lot to be on the lookout for tomorrow. But for today, 3 events left, and 2 of those are going to be at night, so they're not going to bother us. AMD finally taking a rip to the upside. $28.60-ish. You have a price shelf, some overhead resistance. We'll have to see if this has got enough mojo to break through that level. The volume is coming in. On the 5-minute, it is above the VWAP. AMD's done a really good job of maintaining its position through this downturn. You can see the consistent move to the downside for the last 2 weeks. Broke out of this range that it had been in. But it's still on the daily, it's still rolling above that 200. It's absolutely no surprise today that it's making a move to the upside. You can see that when it tests this 200 range, it's a strong wall of support. So when it comes to taking a market short, you have to find somebody willing to loan you those shares. They can be hard to find. So depending on the broker that you have, you might not be able to take something short. Is it worth it? Well, it kind of depends. Last year when the Turkish lira got hammered by the president, we shorted the heck out of that thing. Depending on the broker you had, it was hard to borrow. Was it worth it? I made a lot of money on it. If I hadn't been able to borrow it, I wouldn't have made that money. So kind of, yeah, Creed, you remember that? Good times. Oh, that was like what, August, September, something like that. Right around the time that Harley, we got to short Harley really good. Got a call out again on X. Looks like it found some support. It's now giving that pullback still at the 786. This can look a bit cluttered. We don't really need that RSI anymore.